Hey Charleston, it's been a long time and I apologize since I've done a market update. I do try to keep all my clients updated on the market and certainly want to offer my opinions. And now that we are in December, I think it's most useful to kind of give you an update on where we are a little bit compared to 2024, where we've been in 2025 and where I think things are going. All right, so let's start with an overview of the Charleston market, right? You know, interest rates have been kind of funky up and down, and there is some speculation as to what 2026 will look like as far as interest rates go. As an overview of Charleston though, it is, I've heard a lot of, Chicken Little stories, we're gonna run, the sky's falling, all these things happening. That's just not the case. I would call 2025 a rebalancing market. We had all the COVID stuff that caused things to spike out of control, and then we had kind of some reaction to that after. Last year's market, we still had a sense of urgency and we had a lot of things moving with people. This year is much more cautious, I would call it, right? So people that don't have to sell are waiting a little bit. People that are thinking about buying are spending more time thinking about it. But truly, the biggest picture we've had in the market is things are staying on the market longer. What does that mean? So for a seller, you truly have to have your home prepared to sell. You truly have to be very realistic as far as pricing goes. And I think, and I always say this, that you need to work with someone who knows how to do that, right? If you think you're gonna get the prices that were spiking out of control during the COVID market of 21, 22, it's just not happening, right? But if you work with someone that can help you, you're still gonna make money on your house. In micro markets, we maybe have seen some things even out and be a little at market or just above market. But for the most part, you will make a profit off your house. You just need to be a little more realistic about that. So my overview of all the Charleston market is we continue to see appreciation of value. We continue to see prices going up. We have not seen a tremendous amount of inventory come out as well. But things are taking longer. So buyers have a little more opportunity. Sellers still have opportunity. You just have to have your home ready to sell, updated, whether it's renovations, whether it's replacing a roof or other major parts of the house. And you got to be realistic about your pricing, but it's still a very good market in Charleston. All right, so now let's talk about Mount Pleasant. That's the area that I live and I most specialize in, right? And as you guys know, Mount Pleasant is kind of designated home south of the Isle of Palms connector, which we call in our MLS Area 42, and areas north of the Isle of Palms connector, which we call Area 41. Let's start with Area 41. So again, inventory's up a little bit, but it's not up much. It's not as much as you think. Mount Pleasant, for the most part, with the exception of some, kind of spin up little communities, is built out as far as new construction goes. So most of what we deal with is resale. Okay, so north of the Isle of Palms connector, we've seen, average price has gone up. Median price is kind of, I would say, balanced again. And the real difference in our market tends to be the single family home that are detached versus the townhomes or condos. But the single family detached market continues to be good. Inventory is, like I said, it's pretty balanced. It's not out of control, but it's not too little. But what's really happening is there is more time on the market because I think, like in the macro overview of Charleston, pricing continues to be an issue. People really need to work on how they price their home because that will greatly influence your time on the market. You also have the option in some ways to kind of look at the timing of when you list your home. Traditionally in Charleston, we were seasonal. You would see things slow down a little bit over the holidays. You would see things kind of pick up in the latter part of the first quarter and as we head to the next level. So talk to your agent about those things. Back to the same thing with the overview though, your home needs to be ready to market. It needs to be updated. It needs to look good. The flaws and things of the past, buyers are much more selective than they used to be. And in this rebalancing market, that's back to what it used to be. So you just need to present your home well for sale and then market your home well with someone who knows what they're doing with that. Townhomes are a whole different thing. We're seeing inventory go up quite a bit and we're seeing, things stay on the market for a while. And in some cases, we're seeing things not sell. That, we're getting a lot of things that are either priced, then we drop the prices, then we just take it off the market. Again, it is a very price sensitive market. and people want to do. What's also happening with condos, we see the regime fees go up every month. Why? Insurance is more expensive. If the condo community doesn't keep up with their reserves and their roofing and the other stuff, some of those are getting out of control. So as those regime fees go up, affordability goes down because people look at a monthly payment versus what it costs. So again, north of the Isle of Palms, again, a balanced market. We're still seeing prices increase, but modestly, and we're also, kind of seeing a lot of price changes, which means out of the gate, people are overpricing houses. South of the Isle of Palms connector, it's kind of a mimic of north, but again, south of the Isle of Palms connector, we tend to have less homes, we tend to have older homes, and then we have markets of some pretty, what would be considered in Mount Pleasant, prestigious neighborhoods, with a little bit of land and some beautiful homes. And then we have other sections that were, convenient, location in real estate, but built a little bit different. So we're seeing some changes with that stuff too. Things that had seen some pretty astronomical pricing that really wasn't consistent with the neighborhood is balancing a little bit. Those areas that are really well done and are more of the luxury market, so to speak, are selling. It's back to, again, what does it look like? Is it updated? Has it been renovated? I'm finding that sellers are much less willing to take on, whether it's deferred maintenance or other kind of updates. They're expecting that if they're going to pay a premium. I think in many cases, they're willing to pay the premium if it's updated, if it's ready to go. What we're seeing is if it's not, people are skipping over that house and going to the next one because maybe they're seeing things stay on the market a little longer. Townhomes south of the Isle of Palms connector, same kind of thing. That's the market that's taking probably the biggest, it's not a hit per se, but it's not moving as quickly as things had before. So it's back to that pricing selectivity, and it's back to kind of that, what does it look like? What's the regime fee? What is the status of the regime? Is there a lawsuit going on, special assessment? So all of that information has to be dealt with in order to list it and sell it in a timely rate. All right, so now I'm gonna put my crystal ball out and I'm gonna tell you exactly what's gonna happen in 2026. 20 years in real estate, here's what I would tell you. Anyone who tells you they know what's gonna happen with interest rates is lying to you. No one does. We've had a lot of unprecedented stuff as far as the economy goes. There's new things with tariffs. There's other things floating out there that just we don't know yet. And economists are trying to figure that out. People had said tariffs are going to be terrible, this, and there's going to be this gloom and doom. That hasn't happened. On the same level, it's one of those we have to wait and see kind of things. And what is that causing? It's causing a lot of hesitation as far as the Fed dropping rates. Remember, mortgage rates don't directly correlate with Fed rates, right? It's more the bond market and how that works, and Treasury and those kind of things. Overall, I think we will see some modest decreases in the rates. We just had a good jobs report come out. We had some good news on inflation, but I don't think it's going to be what some people think. Oh, we're going to be, 5 point whatever percent in 2026. I think we're going to see some balancing again and some modest, improvements in the mortgage process. Thus, I think we do have a lot of pent-up demand out there. There's a lot of people that have been waiting. I'm not going to sell right now because, I'm not going to buy right now because. And, the fact of life is life moves on, right? I want to go retire. I want to go do this. I have a job change. I got to do this. So I think we're going to see a good number of transactions in 2026. And I think the key is going to be, again, if you're a seller, you've got to have that house ready to go and you've got to be realistic about your pricing. And if you're a buyer, same thing. You can be a little more selective and you've got to, always get yourself prepared as far as working with someone that tells you about a mortgage, what you qualify for, what your buying power is. That's essential. Mortgage people are your friend. They help you in this process. And back to my message, it really takes, in my opinion, someone who understands the area and the market. If you're looking at national publications that are giving you a doom and gloom about real estate, it's just not the way real estate works. Real estate is a micro market thing. Meaning what? Charleston tends to be a little immune to some of the things that happen in other places. So some of the craziness and urgency that you may see in a national publication or online could be very different than what the market is that you're looking at. In some cases, it varies by neighborhood here. I think the take-home message is work with a professional that you trust. And of course, I would love to work with you. I've been doing this a long time. I love my clients. I enjoy doing what I do. And I just try to be someone who is real and gives you advice and doesn't push you to do anything. So I would love to hear from you in 2026. Now's a great time to start planning. If you're thinking about buying in 2026, give me a call. Let me know. I'd love to help you in any way I can. All of my contact information is available via my link. My phone number is 843-460-4939. And I look forward to working with you, talking with you in 2026.